Hello, this is Ria and you're watching the News Point. In January 2023, a storm hit India's financial markets. A small US research firm, Hindenburg Research, dropped a bombshell report accusing one of India's biggest conglomerates, the Adani Group, of stock manipulation, accounting fraud, and use of offshore shell companies. Markets went into free fall. Adani Group lost over $100 billion in market value. Public trust was shaken, and questions about regulatory oversight flooded the headlines. But now, nearly 2 years later, India's market regulator, SEBI, has finally spoken. And the verdict? Gautam Adani and his companies have been cleared. Now let's rewind. Hindenburg's 2023 report accused the Adani Group of running a corporate con. It claimed that Adani used a web of offshore entities to secretly funnel money into its own listed companies, pumping up stock prices artificially and violating related party disclosure laws. They pointed fingers at entities like Milestone Trade Links, Raver Infrastructure, and Adani Corp, saying they were connected to Adani insiders but weren't disclosed as related parties. Adani stocks tumbled, Parliament was disrupted, the Supreme Court stepped in and SEBI was ordered to investigate. Fast forward to September 18, 2025. SEBI released its final orders in the case. 2 detailed rulings, multiple entities investigated, no evidence of wrongdoing found. Here's what SEBI said point by point. The entities flagged by Hindenburg were not classified as related parties under SEBI's rules at the time the transactions occurred. Laws only expanded in 2021 to 23, and SEBI ruled those changes couldn't be applied retroactively. The financial transactions questioned in the report? According to SEBI, loans were given and repaid with interest. There was no misuse of investor money or diversion of company funds. No fraud, no insider trading, no disclosure violations. SEBI found no evidence that Adani or his group concealed facts or manipulated the market unfairly. In short, clean chit. For Adani and his companies, it's a major win, not just legally but reputationally. Stock prices have begun to recover. Investor confidence is cautiously returning, and Adani is now calling for an apology from those who, in his words, tried to derail India's growth story. But let's be clear, SEBI's ruling doesn't say Hindenburg's report was entirely wrong. It says the alleged violations didn't hold up under current Indian law. It doesn't erase the fact that the Adani Group's complex corporate structures raised eyebrows, or that retail investors suffered massive losses, or that global regulators may still have their own questions. What SEBI's order does show is laws matter, timings matter, and in India, regulations don't apply retroactively, no matter how suspicious something might look in hindsight. The Adani-Hindenburg saga will go down as one of the most dramatic corporate battles in Indian history. A foreign research firm versus a domestic giant. Billions lost, billions regained, reputations shaken, trust tested. And now, at least for SEBI, case closed. But for global markets, for regulators, and for investors, the lessons are just beginning. For more updates, keep watching the News Point.